This is the Power Producers Podcast, where we are refining and redefining the sales game.
Rule number one is you have to believe in yourself. You're the only one who doesn't think you belong in this appointment. The prospect has already validated your existence by scheduling time with you. Get it through your head you belong here, go in there, crush it, and close the deal.
A place where sales professionals can come to learn from other sales professionals and thought leaders that have mastered their craft.
The difference between a good salesperson and a best-in-class salesperson is only 2 minutes. By spending an extra 2 minutes on what you might think is a mundane task in the sales game, you separate yourselves from the pack, you grow your book of business, you close more deals, and you retain your accounts.
As well as their peers who are still striving for perfection to achieve their why.
I have a wife and 4 kids. Failure is not an option.
Real sales professionals, real stories, real results. Are you ready to feel the power?
Hey everybody, welcome to the Power Producers Podcast, where we are refining and redefining the sales game. Today we have a guest that I am extremely excited to have on, Mr. Brian Thornton from ProWriters. What's going on, Brian?
Everything, right? In the cyber universe, it's just one big breach after another. So it's been a lot going on, as always.
And truthfully, we're delayed in starting the podcast recording because I just got notification that one of my clients in the cyber and tech E&O space just got served with a class action lawsuit. So
excellent.
I got that going for me this afternoon, which is nice.
Yeah.
But in the spirit of that, why don't you give everybody? I didn't even realize that you were on the carrier side at one point until we started talking. So why don't you give everybody sort of what your background is and how you got to where you are today, and then we'll dive into ProWriters and what that looks like.
Yeah, absolutely. So when I started in the 90s, AIG, then Chubb, then Hiscox, and focused on E&O, professional management lines. At AIG, it was like Fortune 500 style business, heavily managed. Really technical, large risks. And then Chubb, a lot more of the same. And then at Hiscox, focused on the large as well as the SME business, and ran their tech and cyber practice and so got to know a lot of the different brokers on the retail side. And then about in 2013, we started ProWriters. And so, what I saw was an opportunity to kind of underwriting and brokerage process to make it easier for brokers to be able to get terms, to be able to compare them. And so, cyber has evolved heavily even since we started ProWriters in 2013. More of a must-have product for a lot of small businesses that probably never thought they would need it before. Certainly with kind of ransomware and social engineering and things where companies said, I don't have a lot of data, so I don't necessarily need this. Now, more kind of demand for the product, and we're seeing a ton more losses, right, driven by ransomware, social engineering, and so I've been on that side, on the underwriting side, for the majority of the time, and been on the brokerage side now, so building that out and kind of rolling this out to independent agents all over the country, and so we're seeing kind of certainly rapid growth with the platform and the automation it brings downstream to the brokers. Seen phenomenal growth, and part of that's the market, right? It's really difficult. So brokers are getting a lot of risks that have claims or being non-renewed or terms are changing and they need to market it, and that's where I think we come in and bring value.
Well, I mean, it was only a matter of time till we had really good actuarial data. You have to have policies in force before you see claims come in, and I liken the whole cyber space and even the techie, and all of that to where EPLI was. A lot of people do when it first came out. All the agents heard about it. They read about it in Rough Notes or someplace. They decided they wanted to go out and flex their knowledge and represent it at the point of sale. And they're talking about it like they understand the product, selling it all day long, every day. Pricing was thinner than it needed to be. And then the claims happened, and then boom, hard market, rates went up. So did retentions. Appetite constricted rapidly, and I don't know if we're 100% there yet with cyber and tech E&O, but I can tell you we're getting close, man, especially for people who are working with managed services providers. I mean, those are almost impossible to get reasonable terms on at this point because there's just so much exposure there that they have no control over.
Yeah, I'd been talking with kind of people in a long time where I just never understood from the underwriting perspective. There's no way to understand how much data an MSP potentially has. They could sign up one client, and that client could have 1 million records on their server, and they wouldn't know, right?
Yep.
To kind of judge that exposure, and so we do kind of place them every day. We're getting a lot of complaints from them saying, or their brokers saying, your pricing's way too expensive. And I'm sitting there thinking, well, in reality, it was just under that everyone got used to it being underpriced. And now I think there's a lot of people don't want to quote them, so there's not that many markets that will. So it's going to cost more, it's traditional kind of supply and demand. And then you couple that with a traditional market right now, that's exacerbating the issue. But, MSPs are targets because that kind of, single point of entry to get to 200 clients.
Yeah, they're a gateway, man. They're a gateway to so many other people.
Hackers want to target them, and it makes sense. And so it's a real challenge, I think, on the underwriting side. But that's kind of that bigger, larger exposure when you talk about cyber being kind of like EPL. That analogy, and I also think sometimes I think about it like property, and you've got kind of that. It's almost like hurricane cat exposure. Everyone's always worried about one event that's going to trigger all their policies on the carrier side. Whether that's go down or something like that. That trigger all these other policies, and so that's another challenge to manage the aggregation, and just with an MSP it's the same kind of issue that you could see hundreds of claims.
Well, and I think the other thing too is even if you sell an MSP a policy, what are the chances that the agent is actually offering them adequate limits, right? I mean, what are adequate limits for an MSP? I don't even know where you started. Just like you said, how do you even define that? And to your point, I've even got this on some of my larger cyber and tech E&O risks. They're stacked programs at this point with a primary layer and one and sometimes two excess layers. And that adds its own level of complications to everything, because everybody's got to get along in the event of a claim and determine who's going to do what and all of that. Yeah. So,
So is that just going to take more claims to figure out how to price it? I mean, is there really any other option? I mean, that's the main data point, right?
Yeah, it'll be more claims until,
to me, it's like writing
one big one hits.
Yeah, it's like writing workers' comp on a roofer. We know that you're a roofer. We know that you're climbing around on roofs. We know that at some point there's probably going to be some sort of an accident, but you can only charge so much premium or the roofers aren't going to be able to operate, or they're going to operate sloppily with no insurance. And I think that's probably where you head in this situation, right? I mean, I literally talked to a managed services provider one time, and we were talking about general liability and professional liability and all of that. And he said, I need to understand why I need any of this. Why can't I just if somebody sues me, just shut down my LLC and open up under another one?
Yeah, I remember this.
Yeah,
and I mean, how do you even deal with somebody when that's the mentality that they have?
I don't think you do. I think you just say, see ya.
That's ultimately where that heads, right? They buy the limits that they can afford. And if they get hit with some massive issue, they're going to have to shut their doors because they wouldn't have been able to afford enough limits. Kind of, fortunately, we haven't seen those types of events. Or at least I haven't seen those kind of industry-shaking events get crushed. But, for a small one, for a $1 million, they're looking at $10,000 deductible and kind of start. And they were probably paying $1,200. A lot of the carriers get misclassified, and people missed it. So it would get put in as a software developer or co-location. It would get put in something that wasn't triggering MSP at the. So a lot of carriers had them on the books and didn't even realize it, and it was a $1,500 policy because it gets put in the wrong way. So that's another challenge. I think underwriters are certainly doing a better job of looking for MSPs and saying no, thank you. So that's adding another challenge to the market.
I think before we jump into your platform and how slick it is, I want to bring something else up too. And I have to be careful because obviously we have contracts with direct carriers nationally. Mm-hmm. But there's a big difference between an endorsement for cyber that goes onto a BOP or a package policy and an actual coverage form that was specifically designed for cyber. And I think that a lot of agents out there don't realize just how vast the difference is between those. I mean, Chubb has a pretty good cyber form. I don't have many issues with Chubb's form. I think, if I were to look across all of the standard admitted markets, theirs probably stands out to me as the best, but there's a lot of others behind them that tout themselves as technology insurers.
Yep.
And oh my goodness, like
Yeah, you're really exposing
number one,
your
it's
own.
cheap.
You're exposed by selling that and saying, yeah, you're covered for cyber, and it turns out when they have an event, they're not. And the shame of it is, for a lot of those companies, $1 million limit will probably not be that expensive for really broad, robust. Think, oh, I've got it in my BOP, I've got a little sublimit, and it's the coverage is inadequate, right? There's often, even in a small sublimit on those, there's often sublimits for some of the key things like forensics or otherwise that are the big cost drivers. That, and you think the limits are inadequate, it's missing a lot of coverage for a lot of the critical coverages, and it often doesn't come with that panel of like vendors that are what you're buying, right? When you have all the experts at all the top firms that do this for a living, and they can advise you and walk you through it, and if you don't get that, the policy is really not worth anything. So yeah, that is a big issue in the industry, and I going to take time to kind of convince people that standalone is going to be more appropriate. And we see it with even just professional service policies. We saw a lot of lawyers that had a little addition to their LPL policy, and I thought, why would you not buy a standalone policy? Do you really want to erode your LPL limits with a cyber claim? And then you don't have that coverage when you exhaust your limits. So there's the issue is everywhere, but in the right direction. I think more and more people are entertaining it, but it requires kind of education.
Well, I think what you and I were
this.
talking. Sorry, David.
Go ahead.
Before we got on, I think what you and I were talking about the comparisons, plays a huge role. I don't know if you want to get into that now or if we want to talk about that later.
No, I want to hold off on that for 1 second because we are going to go there. But I do want to ask you a question. Because we have 10,000 agents listening to this right now. What are 2 or 3 things they can look for on that standard? Whether I'm not going to name company names, but on the usual suspect, 2 or 3 things that are low hanging fruit that an agent can look at and say, nope, you don't have coverage because of this, or this, that are immediately addressed in a standalone cyber form.
Yeah, I would say in most of the sublimits that are part of a BOP or something like that, typically we see there's a really low sublimit on forensics, which is one of the most critical pieces of the coverage. The sublimit, even if it was at the full sublimit, is probably still too low, but that's a critical component. Typically, there's not a lot of coverage for potentially not ransomware or not ransom payments. And a lot of times there's not business interruption or not the full business interruption coverage from a cyber event, and that can be part of a ransomware event as well, right? It's not just the ransom, it's all these other issues, especially business interruption. And so they're not going to have coverage anywhere else. The only place they're really going to get that is in that standalone policy. And that coverage is broader as well because there's dependent business interruption. If a third party you rely on goes down, things like that, none of that is going to be covered. And again, the access to the panel of vendors is usually not even closely related to that. It's just a reimbursement. And that's really what you need. You need a carrier. You've got negotiated rates with all the top vendors that are going to hold your hand through that process and walk you through everything you need to do and keep you out of trouble, on top of then obviously having the insurance to cover your loss. So dependent and regular business interruption from a cyber event, ransom payments are often not even covered. And then a lot of times like PCI, fines and penalties, wouldn't be covered in that as well. And if you're taking credit cards, that's critical coverage.
I'm glad you said that because I was going to mention it if you didn't. I think that is a big one, the fines and penalties piece. And I mean, you're never going to get a huge sublimit for that. But even if, whatever you can get's better than what you're going to see on many forms. And certainly those forms that are in the admitted market in most cases. Let's talk a little bit, though. I mean, you guys do a really good job of having a good base of carriers that you present quotes from in what I would say is a very seamless process for an agent. And it's very easy to I'm a visual person. So when those quotes come through, for me to be able to look at that document and just scan across and see what's got the mark and what doesn't to show coverage there makes it very easy for me to determine what I'm going to recommend. And it also makes it very easy for me to show that to a client or a prospect and say, this is what I'm recommending, and here's why. These are all of the holes in the other options. Yes, this one's $1,000 more, but realistically, you're taking $250,000 more in risk because you don't have a sublimit for this, and it's excluded on the policy or whatever else. So talk a little bit about the thought process behind that, because I do think one thing that I like about it is that it is not 100% quote bind issue. I'm sure you get pushback for that, but I'm of the mindset that if I've got a client buying a product that is as complicated as cyber has the ability to be, I need to have the last look at that if my E&O is going to be on the hook for it.
Yep.
And so I do appreciate that. I don't know how much of a rub you get. I mean, there are people out there that are doing quote bind issue, but literally every time we've done that, we've shredded the coverage for them, and you're basically setting your client up for a huge issue down the road. And again, I'm not saying everybody, because there's certainly people out there that are doing it the right way, but most of the time, your client can't even understand why they had additional premium on a general liability audit. Are they really the one that needs to be analyzing cyber forms and making buying decisions?
Yeah, a lot of that automatic quote bind issue, garbage in, garbage out. People put in the wrong data. They don't know what to ask for. They don't know what coverages they need, so they're not going to necessarily get what they want. And so I think the carriers initially, they were worried about comparative rating because they just felt it's going to be a race to the bottom. And we said, no, we're going to automate a coverage comparison that's going to focus heavily on the different values that each of the carriers are bringing so that the agent can help the client navigate and find the right policy for them based on all the different coverage nuances, which there's a lot. And so the value I think that the carriers got comfortable with here was we said, we're going to look at every one of these before they go out. So even if the data comes in and it does auto quote and everything looks fine, we still have someone before every single set of quotes go out, look at it and review it for accuracy. Is this the right industry code? Because that can make a big difference. That could turn something from a quote to a decline, if it's not categorized properly, especially with the white labels that brokers make client facing. Clients often put in the wrong code. So we always want to double check and look at everything before we release it and then provide some guidance around that. So that's one thing that I think got the carriers a little bit more comfortable with the process, that we were actually going to look at it and it wasn't just a black box of data coming in and out. But really the way we kind of thought about it was on the carrier side, I saw all the inefficiencies in this process. And then when we kind of worked with brokers and figured out, where we saw opportunity, it was, this is small, often for the SME business, it's small revenue. It might be less than 1% of an agent's revenue, right? They don't have a lot of it, but it's a high touch, highly complicated process. So how do you simplify that? How do you make it easier? How do you make it so that you can actually afford to go sell it and not spend 8 hours on a policy that's going to generate, $500 in commission? And so that was automating the coverage comparison and then focusing on service and expertise behind it, right? So a lot of these kind of auto quote facilities are staffed by a licensed agent that, when you think about some of the direct plays, they can read from a script, but that's all they can really tell you. So there's no value add there. And so we looked at this and said, we want to support independent agents. We want to go through them. So that was our chosen path. And then we thought we could automate this to make their lives easier. And that's kind of the guiding principle about what we did with the platform and everything else we do, is if it makes their life easier, then we want to do it. And so the comparison really saves time. Then we rolled out all the kind of custom branding so that it can bring the retailer's branding onto that comparison automatically, so it's easier for them to share with the client. And a lot of this is driven by the feedback from brokers that have been using it for a while. So we expanded the coverage comparison to not only include all the different limits and sublimits and coverage sections, but then a 2-page glossary. And that was, again, driven by, this will make it easier for me to share with my client because it'll answer a lot of their questions. It might answer brokers' questions, but it might answer client questions about what is exactly bricking, right? Okay, well, here's a definition, and it quickly shows you what that coverage actually entails.
I like that.
And so, it makes it really easy for a broker to quickly add value too, because they can show instant satisfaction to a client of the rates on the screen instantly, if they're doing it or if it's through a white label. But on the back end, they can come quickly to that client and say, hey, I've got a lot more detail behind that. And look, we've marketed this for you and we've showed value. But they can also do it so efficiently that it's not a huge time waste. And so we view, if we do have to spend a lot of time talking about individual risks with newer brokers that we've brought on, we just view that as kind of an investment in the relationship and an investment in training them so that once they've answered this question, they'll know it, that, the next, every time after that they get asked that same question. So, that's part of the process, but it's, kind of a combination of, that's why people always ask, are you an MGA or are you a wholesaler? We kind of fell into no man's land of a little bit of both, but really I view ourselves more as like a digital wholesaler, but we got to focus on marrying all that technology with service and expertise. If you fall on either of those, yeah. So we do a lot of education, a lot of webinars, a lot of white papers, a blog that we publish, 3 or 4 or 5, 6 kind of blogs in a month. On very granular topics that as we get asked about, we'll just start writing them so that we've got it and make it available for everybody.
I think one thing that's a huge benefit, I'm sure my peer group would probably think otherwise because I tend to think differently than most of them. But I think it's a huge benefit that you show the pricing, right? I mean, that to me takes away the shock and awe of me being the one to reveal it. So when I talk to somebody, even if they're irritated because of what the pricing looks like, I know they've already seen it going in, and there's never that dance around, oh, what's this really going to cost me or whatever else. It's more a conversation along the lines of you've just seen how much the pricing can vary from one carrier to the other. Let me explain why. And then you give all of the graphics to make it just extremely easy at the point of sale, man. I mean, I think the other thing too, and the carriers are doing this for selfish reasons in addition to goodwill, but you mentioned the vendors. It doesn't stop there. I mean, there's other resources besides post-claim that are happening in the cyber world.
Yeah.
And I mean, one of the ways that I've always addressed this with people is if you had somebody that had to run, if you hired a company to come in and run an anti-phishing campaign for you, if you hired a company to come in and do all of this, and you show all of the benefits that you get just for being a policyholder with these people, it's insane. I mean, you're basically paying less to get insured than you would if you were to line item each one of the items that you have as a value add and buy those a la carte.
Yeah, that's really an amazing part of the way this product has evolved in the industry over the last 5 years, fairly aggressively, and all the services and value that come with the policy beyond just kind of the post-breach type stuff. That risk management, it's no longer just some static documents that you might be able to get copies of, but it is true cyber risk management tools that are coming with these policies. And a lot gets talked about as far as scanning, so the embedded scan that happens at the point of underwriting, so that when we provide quotes, we can also provide those security reports from any of the carriers that provide them at that quote level to highlight issues. Hey, you've got an open port. This is how ransomware gets in. Hey, you've got out-of-date software. But also throughout the policy period, what we saw with this kind of Microsoft vulnerability that was announced a month or two ago was, we got hundreds of notices from the carriers that do have that scanning capability to us saying, hey, we've just notified your insured that they have this issue and we're here to help them fix it. So we know there's a vulnerability. We've scanned every single insured we have, and we've notified all of them that they have this and we can help them fix it before it turns into a claim. And that was kind of unheard of a few years back. And so there's real value into a lot of these extra services that can help mitigate claims. And once somebody's had one of these events, whether it's ransomware or otherwise, they realize how disruptive this is and how badly they want to avoid ever having a claim.
Well, I can tell you, we write a reasonable amount of business with Corvus, and I didn't notice it before, but it seems like maybe this is something new that they're doing. I'm getting forwarded mid-year scans on my clients. Now, maybe that has something to do with the Microsoft trigger. Maybe it's not. Maybe just 6 months into the policy, they're triggering it to run automatically and make sure everything's the way that they expect it to be. But I got a full-blown report via email saying, here are your results. Share it with your client, da-da-da-da-da. I mean, I think that's great, and it's another touch point.
Yeah, they do a quarterly scan that they'll send to the client and to the broker saying, hey, we sent this to the client just so you've got it. And that's another kind of evolution that now the carriers need to have direct contact with the client at the end of the day so that they can notify them instantly of these problems. And the nice thing is it's also going to the person that bought the insurance. It might not necessarily go to the IT team directly, so that that person that's in charge of managing their risk and insuring it can bring it to the IT people and say, hey, I was just notified of this. It sparks the right kind of conversation of understanding managing.
Oh yeah, because the IT guys are going to be defensive right out of the box. It's never their fault. These scans are inaccurate. Blah 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 blah. Look, man, I've built enough WordPress websites that I understand how unstable they can be, and I can just only speak for our industry, the insurance industry. I'd say probably 75% of the websites are built on a WordPress platform, and if you don't have the right patches in place and everything else, your entire website can get taken out.
Yeah, patch management is critical, especially with something like that that's so commonly used, and there's constantly vulnerabilities being, discovered and then a patch pushed out. But similar to the Microsoft issue is, all right, you've got it, now you've got to go patch it quickly, and that's also where people fall down. So some of these notices are nice to kind of push them. Hey, you got to get this resolved. You got to get this resolved.
So you have the benefit of hearing the opinion and the perspective of a lot of agents across the country at this point. What's the pushback that you guys get? Did they have did they say, well, I tried to sell it for you, but I just couldn't get this one across the finish line? What are the big obstacles that they're facing? Because I'm interested in looking into that and then determining what the ways are to overcome objection for those pushbacks.
Yeah, I think, we do get on the retail side, as far as the end insured, we do get the kind of, well, we outsource our payment processing, so we don't need this. And we have documents we can share with them to show that that's not the truth. You can't outsource the liability. We can look at their contract and request it and say, well, wait a minute, we can point you to the contract you have with your payment processor that shows that this is how much liability there is here that's totally uncovered unless you have a policy. Normally that gets limited to a couple months fees, which is nothing in the grand scheme of things. So that's a common kind of misconception I think we hear from insureds that think, well, I don't need it. Often what we try to, spend time training them on is, okay, let's just remove the data breach component of this for a second. We'll deal with that later. But, ask them, if you come in on Monday morning and your computers are locked and you can't do anything, what are you going to do? What's next? Who are you calling? What's your process? You have none of those things lined up. Like, you need to, the policy itself is important, but it's not the only piece, right? It's a part of the kind of larger risk management. And that's where we've tried to point agents to. These are like 7, 8, 9, 10 low-hanging fruit items that you can help clients with that aren't going to cost a lot, but can help improve their risk. And then as part of that, you can get into the conversation of, and you should have a policy. And I think if clients are willing to look at those things and figure out what they can do to improve their risk, they're often much more willing to engage then on the back end on the policy. So the payment processing one is a big one. A lot of people, very small businesses, just think, I don't need it. I'm not a target because I'm so small. And that's not really the issue. So the other kind of misconception there is a lot of times hackers are not necessarily targeting specific small businesses. They're targeting a known vulnerability. And that doesn't, they don't care which small business it affects. It's just, we're going to go after this. And as soon as we, get our hooks into anybody, we're going to just, unload some ransomware on them and get what we can out of them. And so small businesses are more vulnerable to that because they don't have a full team of people deploying patches and looking at all these things. So, that's another big one that we get a lot.
Well, part of the blame there too is on the media. I mean, look at what just happened here with the pipeline or whatever that got the.
Oh my gosh,
dude!
Have
People
you tried
are
to get gas. Have you
I'm
tried
saying,
to get gas?
I saw a hilarious meme too that said, "There's no gas shortage. You are literally creating the gas shortage by panic buying gas." It's like,
yeah.
I mean, but seriously though, like people see this stuff on the news and they see Colonial or whatever the company is, and I think that's right. But they're like, oh, this is a massive company. That's who this kind of thing happens to. It's like, no, that's not true. That's just what the news covers because they're a massive company. But I mean, truthfully, it's happened to hundreds and thousands of businesses, small businesses, every single day throughout the country that nobody ever hears about, but they're the ones who never survive.
Yeah.
Right, because the money that you can make off of exploiting that one vulnerability and hitting masses of people as opposed to being laser-like focused and targeting is, I mean, that's volume play right out of the box. Death by 1,000 cuts.
Yeah, this one draws the eyes of everyone in the world from the government and everything else, whereas the smaller ones don't make the news. They either pay the ransom or they don't. I think the other kind of just general misconceptions on this, just to touch on them since I'm kind of in that world right now, is we see a lot of people that don't think the policies cover that much, even though they're really broad in scope. And a lot of times it's because of things they've seen in the media. Okay, well, there was a claim that got declined, and I read it in the New York Times that said cyber insurance doesn't pay. And I'm like, I'm looking at it saying, that's because they filed a claim on a property policy that wasn't designed to cover, right? And there's larger issues with these kind of massive companies. And so there's always a lot of misinformation, I think, in the media around what's covered, what's not. I can assure you that the carriers are raising rates because they are paying so many claims. And because, because of that, I think they're doing a very good job of actually paying a lot of claims. So there's, I think the last piece of misinformation out there is that the cyber insurance community itself is driving these ransomware payments, right? It couldn't be further from the truth. It's a small percentage of a claim, right? When you have a ransom event, you also have the business interruption, the cost to rebuild, all these other payments. So it's that payment or that demand, let's say for a huge company like Colonial Pipeline, let's say they end up having to pay a couple $1 million. Okay, the entire claim might cost them $20 million. So it's a very small percentage. And then you think about there's so many non-buyers of the coverage globally. that, you're talking about such a small percentage. And really, I think the carriers have done a good job of driving better behavior, driving better risk, providing these security tools, especially for small businesses. So, those are some additional things we see a lot of that is just kind of not true.
What I'm hearing you say is that if you want to sell this, you need to be more than an insurance salesperson. You need to think like a risk manager for your clients, which is something that we preach literally on every episode of our podcast. People,
Yes.
you've got to quit selling products and start solving problems. And with cyber, and especially using an interface like ProWriters, it makes it so easy. You can make yourself look so intelligent just by walking in and reading what they print out for you. You don't have to go to the level of understanding that Brian has. Brian's in your corner. Brian
Yep.
is, helping to shape the work product that ProWriters puts out that you ultimately use at the point of sale. And, I got to tell you, man, I mean, those scans are great. We have used this. I actually had Mike Carbasi from Corvus in my office, a few months back.
Yep.
And we were looking at ways that we could just use that product from a prospecting standpoint and do a bulk upload and then just see what's our hit ratio. If we have scans on 50 companies and we tell you we're going to use every one of our resources to go after these 50 companies, what does that close rate look like when you finally get in front of somebody? And it made it very easy to have the conversation when you walked in the front door and said, hey, I'm here to talk to you about cyber. It's something that everybody's talking about these days, blah, 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 whatever that script looks like. And you have a folder, and if they give you pushback, you slide that scan across to them.
Any of these
Say,
look familiar?
yeah,
Yeah.
not so fast.
Yeah,
I actually had it, so I don't know if any of yours do this, and I don't want to misspeak or put you on the spot, but I've actually had some of them that come back with a full-blown dark web scan. And
Yeah.
and that's what happened to me. I had one of my clients that said, I don't have an exposure. I'm like, dude, you're a plumbing and HVAC company. Did you read about Target in the news?
Yeah.
He's like, no, we don't have that. So there was pushback 2 or 3 times. And finally, I'm like, okay, well, if we're going to play that game, here you go. Here's a dark web scan. And these 11 passwords go to your financial institutions. And I know they're accurate because they start with your oldest daughter's first name. So where are we going to go from here?
Yeah. Yeah, exactly. The scans are very useful in that kind of prospecting tool. We get a lot of people that put in risks that they haven't even talked to the insured yet, but they're just plugging it in so they can get the reports from all the carriers. They can look at them. They can see some of the differences in them because they do ultimately often spot different things. They'll spot some of the same things in open port they might all catch. There's other times some catch things that others don't, or they value certain things differently. So they're specifically keening in on different things that they think are important. So it's nice to get multiple ones as well so that you can quickly look at them and figure out which one's going to be the best use for you in that discussion with the client to kind of turn their head and say, wait a minute, we've identified some stuff here, right? Here's some things that you're not passing their kind of grade, that you don't have this enabled, you don't have that turned on. It kind of turns it into that risk management discussion. And we constantly bring that back to, there's a lot of low-hanging fruit that are simple things that you can talk to clients about that they can do that might be no cost or very low cost to turn on, like multi-factor, that are really important ways to lower the risk. And I think it turns the conversation into managing the risk as opposed to, I'm just trying to sell you a policy. Because that doesn't solve it. It doesn't solve everything.
I think, too, that agents have still not fully embraced the fact that cyber is here to stay, and it's something that should be brought up in every conversation. And where I'm going with this is businesses that you might not think have a cyber exposure, but really have one. And so I know from my reading that construction companies are targets for cyber. I know that manufacturing companies are targets for cyber. Manufacturing's a little easier for me to digest because I understand that a lot of these, systems now are computerized, and you could literally hack one and shut down an entire manufacturing floor from a ransomware standpoint, and that makes all the sense in the world. But why construction so much? I mean, why is that a target? Is it just due to the lack of sophistication of the security for these companies, so it makes it very easy, or what's the story there?
Yeah, I mean, I think it's a combination of that, and also a lot of construction companies have a high volume of pass-through revenues, so there's more money there to be grabbed essentially by some of the bad guys. So it's often inadequate controls, and then it's an easy kind of in to say, hey, there's a lot of pass-through here. You see a lot of small construction companies you've never heard of that have 50, 75 million in revenue because they're doing, say, commercial construction or larger residential projects. And so there's a lot there. And there's a lot of people interconnecting on a lot of those projects as well. So sometimes when you can get into one, you can get into many through a common system that they're all using and collaborating on. So I think there's a few different reasons that they go after them, but I think the money's there. And I think that's kind of makes it an easy target. But usually we see that the controls aren't as good in the construction side as some of the other more sophisticated operations. But manufacturing is another one. The business interruption, coverage on a cyber policy for manufacturers is critically important because that's not covered anywhere else. So they need these cyber policies. And a long time ago, they probably didn't think about that as much.
I think that probably more so than other lines of coverage, cyber specifically is one where case studies and actual examples really help at the point of sale because, like you had mentioned earlier, David, a lot of people don't really think that they have an exposure or can't imagine how it would possibly affect them until they see some real life examples. I think it has a much stronger impact when related to cyber than maybe some other lines that we deal with on a more regular basis.
Yeah, I think that's very true.
Yeah, it's like workers' comp. I mean, nobody wants to get serious about safety till one-armed Bob. I mean, it's just the way that it is.
Yeah.
And I don't know how you change that mindset. Here's my theory, Brian, on everything involving insurance. Okay, there's not a college course called How to Buy Insurance for My Business. It doesn't exist.
Yeah.
So we're the ones who are educating all of these people at the point of sale. And the buyers have been conditioned by insurance agents. So the only way we're going to be able to change the way the buyer thinks is to go back and revisit what our approach is and go through one of education and one of explaining risk management and total cost of risk and how that's the number you really should be focusing on because ultimately it's going to control your premium. It's going to control a lot of your risk transfer and other mechanisms that are in place in your organization. And so when agents say, I can't sell cyber, I just think what I'm hearing is you're just not willing to educate your client or educate yourself to the point that you're comfortable in going out and educating your client. And as long as the majority of the people keep doing that way, it's going to be a whole lot easier on me to sell cyber to people.
Yeah, I think it creates the opportunity, right? I've never, in all the years that we've had the company, never had an agent that said, I need help selling this to the client because I'm getting resistance, where we got on the phone with them, never walked away with a sale. Because it's the entire conversation starts with talking about their controls, understanding, what they want to tell you about their company and where they view the risk is, and then talking about the things that they didn't realize that are big risks for them that are covered under these policies, and then explaining, a lot of granular detail around all this. And again, those are conversations that even if it's a tiny little account that's less than $1,000 in premium, we're happy to get on the phone for an hour with the client because we're educating everybody in the process. We try to do them in mass scale on webinars and otherwise, but we'll do those on individual accounts because everyone's focused. The people that were maybe less likely to kind of figure this out on their own when they have a live risk on their desk and they want to bind it, and it might mean that they get all the other policies for this client and all the other coverages, they're totally invested in it at that point. And so we do it all day, every day. So can jump on a call at a moment's notice and talk through it with a client and get them to the point where they understand, okay, I didn't understand all my exposures. Now I have a better sense. And now you're telling me this policy covers a bunch of these things that you just pointed out. Yes, we definitely.
What would you say is one, sorry, David, what would you say is one like main thing that people need to keep in mind when they're shopping for cyber insurance?
The devil's in the detail. And so there's a lot of little nuances in the coverage that there's plenty of people that have access to these products, right? The problem is if you don't really understand, that's where people go wrong and they think, oh, I've fallen in love with XYZ carrier. I'm fine. This is good. This is good enough. And what they don't realize is, well, that carrier is not they're not, it's a reimbursement policy. What if that client doesn't have the funds to pay it? You need a policy that's going to be paid. Well, if you're uneducated, you think, well, this is a broad coverage. They've sold me on it. I'm selling this. When you don't know the kind of detail in those coverages, you're in a lot of trouble by selling something that really isn't what you thought it was or what a client thought it was, right? And then there can still, while there still could be a covered claim, they still could be coming after you or unhappy with what they got. So that's probably is just kind of not understanding all the detail behind it. There's probably plenty of other things we could point out, but that's probably the biggest one.
So that's a pretty good segue to what my question was, and that is there's a lot of things covered by cyber policies that you might not think are covered by a cyber policy. Paper records in certain situations are one of those.
Yeah.
What would you say like the top 3 things are that an agent would be surprised by that a cyber policy covers?
I think potentially bodily injury and property damage. I don't think people kind of thought about that with cyber, and there's certainly carriers that are able to provide those coverage. And there's certainly things that should be looked at more for specific risks that have a bigger exposure in that space, healthcare risks, biomed, implanted devices, things like that, pacemakers, insulin pumps, things like that.
I have a friend of mine right now, and you may even know about this account because I think that you're involved in it, but they do an autonomous lawnmower, right? And they need bodily injury from the cyber aspect of that. Yeah, it's like a Roomba for your lawn. And they're having a hard time finding a carrier that will give bodily injury on the cyber policy. But based on how that thing's set up, the GL may not pick up the bodily injury depending on what caused the thing to go rogue.
Yeah, so it should be something that you're getting that coverage. And that's something that, for us, if we've got a good relationship with the cyber markets, it can be addressed, it can be underwritten too, and it can be added if it's not normal appetite. Things can still be manuscripted outside of that. So that's one I think that people don't realize about. Another one is just kind of the client funds coverage. So you've got social engineering and crime coverage, but some of the policies, but not all, also apply to client funds. So if you're an insurance agent, you've got funds held in escrow, a law firm, a bookkeeping firm that might have access to client funds. A lot of times it's, each policy is very different in how they word that. And some don't, they only apply to your operational funds, not third-party funds in your care, custody, and control, and others do. And so that's, I think, a place where people go wrong and don't realize for certain risks that that's going to be much more important coverage to have. So that's one I think people miss. And then another one that people just aren't always as aware of is bricking. The kind of hardware coverage for devices that get destroyed in a hack. There's coverage under the cyber policies for that, and that can be significant. If you have to throw out all your laptops or a bunch of servers, having that policy reimburse you on top of everything else you had to deal with is just, that could be another $50,000 in hardware replacement costs that you didn't have elsewhere, or if you didn't have the right cyber policy, you wouldn't have had. I think pretty much all the policies, or at least all the good policies now extend to BYOD. Certainly with the pandemic, anyone who hadn't been doing it and everyone went kind of remote for a period of time, that was important to make sure the policies were clear that they covered that as well. And then I think the reimbursement aspect versus pay on behalf is one that gets missed a lot by people that are uneducated. So, pay on behalf is going to be really important if you have a ransomware event. And if you have to come up with $500,000, for a ransom payment on a moment's notice, right? You've got a limited amount of time. You might not have that cash in your operational account in, extra funds to just go write a check.
That's going to be a no for me, dog.
Yeah, so it's that's a problem that people might not realize when they're buying a policy. Some pay on behalf, some don't, and so good carriers understand this. Good brokers would understand it. That's an important piece because it's also, you might have a 72-hour window to get all this done. You also then have to go get transfer all this into Bitcoin. Like if you're with the wrong carrier, you're kind of on your own and seeking reimbursement. Whereas if you're with a good carrier, they're walking you through that. They've got all the vendors lined up that can have Bitcoin available. And can go pay it for you, with the advice of attorneys to make sure that it's legally allowable, which is a whole nother kind of question. So that's, I think, an important piece that gets missed a lot as far as the difference in some of the coverages. Oh, this is a cheap policy, I want to go with that one. Well, here's also a difference that might be a big difference at the end of the day if you did experience a ransomware event. And would you rather the carrier just pay that for you? And then that last piece that goes back to kind of misinformation. I do try to remind people that the carriers don't ultimately decide to pay these ransoms. It's the insured. And so it's not the carriers that are driving that. It's the insured that has to decide at the end of the day, can we recover from our backups when we're working with expert forensics firms and expert lawyers that this is what they do and they're advising us. And if they're, they've got shareholders, they've got to take into account their fiduciary duty in this kind of area of what's best for us. Do I pay a $500,000 ransom? To get back up and running a lot faster, even though I don't want to? Or do I say no, and it snowballs into a much bigger issue and it takes us much longer to recover? Am I now at risk because I get, a directors and officers claim that we mismanaged this and we made the wrong decisions in the process? So there's a bunch of nuances into these coverages, but those are a couple of the key ones I would say.
I think another one, and I haven't heard us mention this yet, but it's the waiting period for the business income too. That's all over the board, man, depending on who's quoting it. Speak to that for a little bit and why that's so important. I mean, other than the obvious.
Yeah, a lot of the policies might be, some go down to 0, some are at kind of 6 hours, 8 hours, 12 hours. There's not a lot of times, in the past, there was not a lot of times that businesses would be down for that long. But now when you start to look at ransomware events, like CNA got hit earlier this year, I think everyone's already forgotten about that one. But, they had experienced a significant disruption. This went
significant in the fact that the agents couldn't even access the website.
Exactly. Right. So there's the downstream effect. And so having a policy, let's say that you're an agent and that's you only work with that carrier or that vendor, and you're out for 4 or 5 days and you can't do anything. Having that dependent business interruption coverage is gonna be important because that's out of your control. And the last thing you want to do is have to rely on a third party to try to make you whole. Let your policy take care of that, and then they can subrogate against them if necessary. But so the waiting period is interesting because in these ransomware events, we're now seeing much more downtime than you saw traditionally in a lot of outages that were just kind of some sort of issue, a denial of service attack or something that caused an outage for 3, 4, 5 hours. It's rare that you'd see companies go down for extended periods of time. But now with ransomware, it's like they have to shut down, they have to unplug, they have to do an investigation before they can start to turn things back on. And so it becomes a much longer, downtime. And so I would say in less sophisticated policies with carriers that aren't as good, you'll see much longer waiting periods. And that's another thing where I think people that just buy a policy from their carrier that they're used to buying other coverages from that aren't necessarily cyber experts or cyber standalone shops, they might get a longer waiting period on that as well.
So I have a technical question for you. You should be able to answer this one with relative ease based on your experience, but I don't think that my peer group thinks through this as much as they need to, at least, for people who haven't dabbled, or I shouldn't say dabbled, but written a considerable amount of professional liability or cyber directors and officers or any of that. But one of the things that's happened over the last 15 years is the migration away from a regular claims made form to a claims made and reported form. Can you talk about what the differences are in those two forms and why the carriers have moved towards claims made and reported?
Yeah, I think, so claims, it seems somewhat self-explanatory, but the devil, again, is in the details. So when you've got claims made and reported, that's going to be a little bit tighter requirement than claims made. Claims made ties back to when the claim was made against you and where the policy period is, whereas claims made and reported means the claim has to be made during the policy period and you have to report it to the carrier within that policy period or a defined period within the expiration of that policy, maybe 30 days. And so there are times specifically, it's a challenge in cyber when you think about it, because sometimes there's these, you're under attack all day, every day. You could be reporting potential issues constantly if you really want it to be super duper safe. It might be overkill, but there's these challenges of, is this really an incident that's going to bubble into a material claim, or is this just another kind of nuisance type issue, but it's just something we've got to deal with? And so it's important to make sure that when you're buying these policies, looking at that provision, if it's claims made and reported, towards the end of each policy period, you've got to be thinking about, are any of these things that we need to put the carrier on notice for? Because the last thing you want is to renew the policy 6 months down the line, that little incident turns into a bigger incident, and now you go back and try to report it to the carrier, and they're going to decline it and say, no, you had to report that within the expiration of the policy or within 30 days of the expiration of the policy, so there's no coverage, you prejudice us, whatever the case may be. I haven't seen carriers be super strict on that language currently. I think there's a general acceptance in the cyber community on the underwriting side that there are challenges here to what was known and what should have been known that could turn into something larger. The same thing kind of occurs with some of these cyber risk reports, right? You give a client a cyber risk report. Do you now put knowledge in their hand that there's a known issue if it identifies something? And another carrier that doesn't ask and doesn't care, is this something that now becomes an issue? So there are a lot of challenges with knowledge and the timing of it. So I would say that ultimately at the end of the day, before you renew coverage, you should be looking at any incidents that occurred throughout the year and if anything needs to be reported, even if on a potential basis, just to make sure that you've kind of covered yourself and you don't potentially walk into a scenario where it turns into a bigger issue later and you miss it. But claims made and reported, Certainly claims made is going to be a little bit broader in that it just ties back to the date that the claim was made against you.
Yeah, so the way that it was explained to me specifically in the technology world is that these people have God complexes and think they can fix everything. So an issue will be brought up to them and they think they're going to handle it internally. And then 9 months down the road, a $10,000 issue is now a $100,000 issue and they can't fix it anymore. And now they want to go and report it to the carrier. And the carrier's like, whoa, wait a minute. Why didn't you bring us in here when this thing was 10,000 and we could have mitigated our own payout?
Yeah.
And instead you held on to it. You're the one who did this. Sorry, you're out of luck at this point.
Yeah, in the tech E&O world, it's super complicated on a lot of these larger software, integration type deals where there's scope creep and the client represents that they've got XYZ in place and they don't always actually have that, and then that's why it starts taking longer for the vendor to do whatever they said they were going to do. So the client starts getting unhappy that it's taking longer and it starts costing more, and the vendor saying, well, wait a minute, you represented that you had all these things in place and you really don't. And that's why it's taking longer, and that's why it's costing more. And so you get this general dissatisfaction that goes on for quite some time and builds and builds and builds, and then all of a sudden it turns into a huge claim. And ultimately that claim is, we want our money back because it's been 3 years and we don't have what you promised. And even if you're close, we're done, we're moving on, and we want our money back and we want damages because we could have had this done 2 years ago. So they turn into fairly significant claims that drag on for quite some time to litigate on top of that.
Well, I'm going to tell you, man, you brought up a good point, and this is something that I say to every single one of my clients and have for literally almost 20 years now, and that is when you're filling out these applications for management liability and professional and cyber and all of that, in many cases, the application becomes a material part of the policy. So you don't need to be taking any shortcuts. It's not, hey, leave that blank. I'm the agent. I'll fill that out when you send it over. Just go ahead and sign and I'll make sure it's right. Or any of the other shortcuts that we all know happen. Your client needs to sit down and answer things the right way. And, just because they may not have something doesn't mean the deal doesn't get done. It doesn't mean that the pricing skyrockets. But to your point, in the event of a claim, it could be the difference between whether or not there's coverage.
Yeah. And that goes back to the risk management approach that you're talking about. If you're bringing that approach to your clients and advising them in that manner, I think you're going to provide better service at the end of the day than somebody else that's just trying to push them over the hump. Just sign it, it's fine, don't worry about it, and we'll move on. And I've collected my commission and I'm done. So that's a challenge. That as if the cyber market wasn't challenging enough to have to deal with all the other.
Throw the agents in the mix; they'll really complicate it for you. We're overachievers when it comes to that.
Yeah.
Good, agree. Well, listen, man, I want to be respectful of your time. We were a little late getting started, but I want to tell everybody we actually have a section of our website built out that will show a webinar and demo of ProWriters product. If you go to killingcommercial.com/QBI for quote bind issue, it's one of the webinars that's there, and there's actually a ton of other resources that we've given you for absolutely free that you can use. And if you want to get in touch with Brian and talk about doing business with them, you can do that directly from that area as well. I get no compensation from ProWriters whatsoever. I say this in front of Brian. He'll nod and confirm that. So I'm doing nothing except trying to help educate our agent base and our listeners and get you guys in front of people that can help you and help you get business done in an efficient manner. I think that with the market hardening, that it's become a very convenient excuse for wholesale brokers that typically handle this stuff for our agencies to just blame it on the hard market and let service go by the wayside. I'm never going to accept that as the status quo in my firm, and I wouldn't expect you to do it in yours. That's why having an interface where you can go on, enter the basic information, and get quotes from literally 5 to 7 carriers, depending on who wants to play, a summary of everything they're offering you, plus, never thought I'd say this word when I woke up this morning, but a glossary of the definitions.
Big glossary
I just can't
guy.
find it. Yeah, I can't find a downside to doing business with ProWriters, and it's not like I'm digging to try, but you guys make it really, really easy on us, and I have to tell you, sincerely, thank you. I'm glad I stumbled onto you, because it's going to make a big difference in our agency moving forward. I can assure you.
Yeah, and we're that's our bread and butter is working through independent agents all over the country. So we're in all 50 states. We're a surplus lines broker in all 50 states and DC. So, we handle all the taxes, trying to make it, that compliance piece, take that off everyone's table and deal with that. And, we're always taking feedback from everyone that is appointed to say, hey, anything you say that was going to make your life easier, we're going to add it to the list and start working on it. But it's, we've meant to make it easy, and it's, it's interesting as the platform has evolved to a true platform that any size risk comes through, because brokers use that to log it in with all the markets, and then we kind of manage it in there. We've just seen, an explosion of growth by the number of people that have signed up, the amount of volume that's coming through. But ultimately, when we look at it, we started to do some analysis, and kind of the walk away from that was, we think we're ultimately saving the end customer premium, because, if you're going to do work on your house and you're going to go to one contractor, you're going to get a price, even if you know he's a good guy. But if you go to 8 or 9 contractors, you're probably going to find some better pricing, just by, the law of large numbers. And so we think we're ultimately saving time. We're kind of bringing efficiencies to the retail broker. But we're also helping them with the coverage comparison, find the right one for the client, and then marry that with service and expertise. I think that's where we're kind of picking up a lot of business from all over the place that's traditionally either in the direct market or through other wholesalers that aren't able to service it as quickly because they don't have the platform that we've got, so they can't instant quote. And so we looked at it and thought, even if you have a carrier that instant quotes in their own kind of portal, right? A lot of times that's 50-50 whether you're going to get an instant quote versus a referral. And that might take some time. Whereas in our platform, because we have so many markets, 97% of the time we have at least one auto quote on cyber risks, and typically 85% of the time we've got 3 to 8 options. And so I think that makes a big difference in kind of in that auto quote world, to be able to quickly come back and say within minutes you've got a coverage comparison and bindable quotes on your desk.
So here's something that we haven't brought up, and I'd be remiss for not mentioning it. So quickly before we go, I understand how these things get built. I can't build one, but I get the process behind it. And what you guys have built as your engine could easily be replicable across other offerings in terms of lines of coverage. What do you have in the future that you're able to share right now that's going to be rolling down the pipeline?
Yeah, so it's a good point. So that's ultimately our goal has been to move beyond cyber. We do, as a wholesale broker, work in all E&O, D&O lines and all the sub-products, so all those kind of specialties. So we're certainly looking at a broad E&O appetite. Miscellaneous E&O is kind of on the horizon, and we may break that down into some smaller, large classes. But next up, so we launched Tech E&O this year, so that's a combo tech and cyber. So that's available on the platform, and we're working on D&O and EPL for private and nonprofit companies. So that's next. That we hope to have live before the end of the year. And then next year we'll probably tackle a bunch of miscellaneous E&O products within that.
Good deal.
Cool.
Good deal. Well, listen, Brian, I appreciate you taking an hour to come and talk with us. This is great conversation. Yep. I'm sure that plenty of people are going to reach out to you, especially if they're as frustrated as what we are on current market conditions and response times. So everybody, again, killingcommercial.com/QBI. Check it out, because not only do we show you how we're using ProWriters, but we give you a strategy across a myriad of quote bind issue products that you can use to build passive revenue in your agency. I'm going to wrap it up, man. I hope you guys have a good week, and we will catch you soon.
Thanks a lot.
You've been listening to the Power Producers Podcast. You can follow Killing Commercial Insurance on Facebook and YouTube. And if you want to take your game to the next level, check out our book, The Extra 2 Minutes, and our website, killingcommercial.com.